Hello, everybody, and welcome to another edition of our Southern California Housing Market Update. My name is Stephen Meade. I'm your host with Domicile real estate for people who love houses. We're into February 8th, 2022. And finally, we're getting a little bit of, you know what, I'm going to go ahead and call this good news. I think this is good news. So, Justice here. I think this is some good news. I'm kind of quietly optimistic. One of the discussions that I've had frequently with people is, people would love to distill the real estate market down into a single variable, right? Interest rates go up, housing prices go down, right? Like we want to talk about one variable. And the fact is, it's more complicated than that, and it doesn't work that way. And you have these forces that are all coming from different directions. Some things want to push prices higher and availability down, and other things do the opposite, right? They will reduce demand. And so one of the things that we want to take a look at is try to understand the relative power of these forces. And what we're trying to do is guess. So for example, if interest rates go up, logic says that home prices should ease and competitiveness should go down. But the problem with that is there are other variables, at play. People feeling like they're going to be priced out of the housing market. So they may be panic buying, trying to get in before those rates go in any higher. So there's kind of a lot of things going on. And we always wonder, we are so undersupplied, how much does that value proposition have to change before we get back to kind of some supply demand equilibrium? So this week, we have what I think might be a little bit of an answer, like where is the point at which the needle starts to move? So I'm going to go ahead and pull this up here. So first thing, piece of good news that we're going to bring to you this Tuesday is inventory levels have actually increased a little bit. And, this is actually different than last year, right? Last year, they basically deteriorated until about the middle of March and then started rebounding upward. Well, here we came off the new year, we're flat, and then we've started to go up a little bit. So already this year looks a little bit different than last year. Now, the overall level of listings is still significantly lower, right? Like that's a reality that we're dealing with, but the shape of this curve is already starting to look a little bit different. And if you were looking at houses last week, guess what? You have more to pick from this week. So definitely some good news there. If you're a seller, don't fret, but as always, you want to prepare your house to sell. And I think the homes that are prepared always do better, no matter what kind of market it is. And as you get a little bit more competition, really, it's in your best interest to have a better prepared house. So first piece of good news, active listings is actually going up rather than deteriorating. Now, this is really what's driving this here. This is our supply end of the market. And you can see we have a pretty healthy uptick in under $1 million listings. We are still not at the level we were at last year for new listings, but we are absolutely higher than we were before, right? This is actually a pretty decent rebound. We're also seeing our 1 to 2 million categories actually looking like the same level of new listings coming up as last year. So really, these two things are very, very encouraging if you are a buyer out there. If you're a seller out there and you've been waiting to sell, do not think you can outtime the market, because statistically you are likely to be wrong. Now, here's our new escrows, right? And this is talking about the homes that went under contract. And this is kind of the demand side of the equation. And you're going to notice something interesting here. It's pretty flat. And there really are a couple of reasons for that. Number one is, had prices and interest rates really changed that value proposition enough where buyers are starting to pull back maybe a little bit from being in the marketplace? That's one possibility. Another, and I want to throw this out there, I'm not sure this is what's happening. I don't think this is really explaining all this, but we've talked about when inventory is very tight, you get a little bit of this like caterpillar-like motion in the market, right? So you imagine a caterpillar like this, the head moves forward as new listings come online, and then the back end of the caterpillar kind of follows behind. And we may be in one of those weeks where we got some fresh new listings in the last week, but they're not showing up as in escrow yet, because it takes approximately 5 days, for that 5 to 7 days for that to kind of, those new listings to really get under contract. So I think that might explain part of this, why these new escrows have not jumped up, but I don't think it explains all of it. I do think we have a little bit of a stagnation in demand. I won't call it a softening because it didn't actually go down really very much, if at all. But we've got a little bit of a stagnation in that demand that isn't growing even as listings are coming online. Now, if we look at our absorption rate, I think that really sort of tells you the story here. Under a million, we're still 85%, right? That is still a very, very strong seller's market. Don't make any mistake, but it's not as competitive as maybe we were at this point last year when we were at 90%. And then our under, or our 1 to 2 million, that's actually quite a bit lower. That's looking a lot more like June type numbers from last year. So a little bit of a reprieve, a little bit of a relief for buyers out there. And here's our closed prices. And what I think is kind of interesting to look at in this graph is to note that our bottom end have both seen price improvements, but we've seen some stagnation in this top end. Now, do remember, this is 4 to 6 weeks ago of prices. These are properties that went under contract basically in the latter part of December. That is usually a pretty soft period of time, but I think it's very telling that even in a soft period of time, we saw increases in both our entry level 25th percentile and our median price, and flatness over here for our upper end or 75th percentile. Now, if we look at, this is another measure that I like to use of competitiveness. And when this number goes higher, it means the market's a little less competitive for you. And I think what this is reflecting is two things. One, it's reflecting an actual reduction in competition. I think that you might see that demand is sort of stagnating a little bit. But the other thing it shows you is that there's really been an influx of recent listings, right? If we got a whole bunch of listings recently, which we did in the last week, we know that number went up. That'll push this up a little bit higher as well. We're still more competitive than we were in the fall, but not as competitive as we were around this time last year. And then if you look at our list to close ratio, or our close to list ratio, we see another little bit of evidence that maybe the market isn't completely nuts and this is flattened out. There's a lot of variability in this statistic. We really try to look for these broader trends. But when I see these numbers hitting, so for under a million, we're right around 103% and 104% for our 1 to 2 million. Just as a reminder, folks, this is the average. So this means the average property under $1 million sold for 103% of its list price, or 3% over. And the average $1 to $2 million property in LA and Orange County sold for 4% above its list price. To see these flatten out indicates that maybe we're seeing something. I'm always a little hesitant to kind of declare things, but in this case, all of these indicators indicate that that demand supply relationship is a little bit better than it was last week. And when we see all these indicators kind of moving in the same direction, I think that's too much really to be a coincidence. I think there might be something here that we might be kind of hitting a little bit of a pain point from an affordability standpoint. I'm going to show you that next, or maybe a couple graphs out. We are hitting sort of that bottom point again, where we can't go much lower on days on market for our new contracts. Around 20 days here for under a million, and maybe 21 days for 1 to 2. That's actually a bit better than we were at this point last year. Not a huge amount. I do think it's interesting we never got to those higher days on market. But now if you look at our affordability, this really is the chart that kind of that I think says something, right? This is where we look at sort of what are homes trading for and where are the prevailing interest rates. And we blew right past 120%. And just as a reminder, this is all indexed back to June of 2018. So if that's our baseline, the payment on a median priced home today is about 127% of that number in June of 2018. And I think we might be seeing a little bit of a pain point in the market from that standpoint. The buyers maybe, they're not running into the market quite as fast as they once were. If we look at interest rates, we're above that 3.5% mark. Fannie and Freddie actually update this only once a week for these national stats. So I actually think this number has moved up a little bit from here. Now, I also want to ask kind of a little bit of a fun question. We have been using this Zoom background for over a year. This is not my actual house or office. We've been using this for over a year. But one of the things I wanted to ask is, should we change it? And if you've got an idea for what you'd like to see, definitely put it in the comments. Also, do not forget to like, subscribe, and smash that notification bell so you hear when we have new videos coming out on YouTube. And then finally, I do want to go ahead again and plug our real estate app. This is not something you have to enter in a code. It's available in the App Store under Domicile RE. RE is for real estate, of course. We don't sell your data to third parties. It's very intuitive. And then you can also ask questions about specific properties to us in kind of like a text, kind of in iMessage like format, and we can respond back to you really easy, just if you have questions about something. So go ahead and see the link in the description below if you're watching on YouTube or if you were watching on Facebook, and take a look at that. I think that's pretty much it. As always, have a great week, everybody. Some good news for buyers. Things are still great for sellers, and we will see you again real soon.